Do bear with me. Sorry about this, folks. Why is that not happening? Oh, well, right. I'll have to fix it afterwards. Sorry about that. Right, on with the show. Hope you're all doing fine and dandy this morning. No, that's not coming up. All right, not going to worry about it now. I'll have to deal with it after. Right, just me and myself for the next couple of days. Cayman is off to sunny Belgium for a couple of days, so I shall keep you entertained. Where are we going to start off? Well, we're going to start off in China. They're taking it to Europe. After a review, they're going to slap tariffs on EU dairy products to the tune of 11.7%. Europe still moaning and groaning about the influence of China. In fact, it's been reported today that they're going to host, EU is going to host some sort of summit in a Belgian castle. Those have tend to have revolving doors on it, the amount of times they've been invaded. So maybe K-Man will bump into a few people while he's over there. But anyway, moving on from them, over in Japan, we had some PPI data out. Coming in there or thereabouts, pretty much as expected. Year on year 2.3%, a bit lower than last month, but still a-okay, up 0.2% on the month. Not wishing to give up a good opportunity, the currency diplomat, as they're called in Japan, Mimura, kicking on the open door, says we will keep communicating with US authorities and will monitor markets with a high sense of urgency. And talking about the current moves in the yen, saying we have not lowered our guard at all. So still verbally intervening, even after we've seen some 400 plus pips coming off since the elections. He also said there has been various speculation on whether we conducted rate checks after the release of the US employment data, to which I have no intention to comment. So those of you who were with us on the Face show yesterday will know that we got a big old blip. Somebody got hammered after the jobs report. It was trading around 154.30s when I noticed it suddenly trading 153.90s, 153.70s, and got knocked all the way down before recovering somewhat. Speculation that was a rate check. Could have been just some shorts who have been caught out in the move down. We're a bit long yen pairs or long dollar yen, hoping for it to go high on the election. Saw an opportunity to bail out some for less of a loss. But either way, we haven't heard anything that, as far as I can tell. We did get some insight that it was possibly a rate check last time. Unless I've missed a headline, we've had nothing to that extent this time. So who knows what that is. The market is definitely more jumpy about the yen right now. Over at the RBA, Bullock says excess demand and tight labour market is fueling inflation. She said the board deemed inflation at a 3 something as unacceptable. It says a higher Aussie dollar and rates will help drive demand into balance. So not that they comment on the currency in the same way that Japan does, but there's a bit of a green light for Aussie to keep gaining. It says we'll hike rates further if inflation proves persistent, but it's unclear if further hikes are needed to slow inflation. So keeping to the hawkish side, but chucking in those don't go get too excited comments. Chancellor Reeves, UK Chancellor Reeves, finally popped her head up from whatever pit she's been hiding in for the last couple of months, saying that the UK future is inextricably bound with that of Europe. Some very bullish comments regarding the UK and Europe. It says we could have deeper EU alignment in some sectors. If one wanted to put the old tinfoil hat on, one could say she's maybe making a pitch to the rejoiners in the Labour Party. If Mr. Starmer goes, maybe she'll put her hat in the ring, and that's going to be her slogan: deeper cooperation with Europe to try and swing voters. But as I say, a bit of a tinfoil hat view on that. She also added that London as a financial centre is an asset for Europe. Well, she's got to work cut out anyway, irrespective of what she may or may not think about any leadership challenge. We had UK GDP out today, Q4 preliminary numbers coming in, absolutely booming. We saw 0.1% growth in the quarter. Couldn't even match the 0.2% expected. Year-on-year number coming in at 1%, below the 1.2% expected and prior. So absolutely dismal, tepid, nothing numbers out of the UK. Good job we've just had a budget which has got zero growth promoting policies in it. So not looking good there. Other data as well, manufacturing production, industrial production, not looking the greatest. Coming in positives, but on the year-on-year, but still missing expectations, still coming in pretty low. It came in on the month, down 0.9% for industrial production, down 0.5% for manufacturing production, so much worse than expected. Maybe we've already seen all the good news coming out from the PMIs and that's it. But this was December numbers, so there could be a little bit of pickup still in the early part of the year. Bundesbank's Nagel says that the new reality calls for more EU debt. This is not the first time he's talked along these lines, but it is still a bit of a shocker coming from one of the most fiscally, if not the most fiscally responsible countries in the Eurozone, Germany calling for more EU debt. And there is a bit of a push going on at the moment. Macron also talking along similar lines about European debt. Lagarde came out giving her list of instructions to the EU, says that 5 areas required quick action. That includes establishing a savings and investment union, making the digital euro a reality, deepening the single market and fostering innovation and strengthening the bloc's core institutional framework. More Europe is what she's calling for, as if we don't have enough of it already. ECB's Big Onion, Cipollone, says we have been preparing to broaden and facilitate access to our repo lines in response to greater global fragmentation and uncertainty. He sees some storm clouds on the horizon. Victor Villeroy, who's on his way out, says we expect economic growth in France between a whopping 0.2 and 0.3% in Q1. So things still pretty weak over there as well. ECB's McClough, he's practicing his tightrope walking, says ECB is in a good place, not rolling out a reduction or a hike of rates. So it could go either way. Right, yesterday's blockbuster NFP data. What a show this was after Mr. Hassett came out with those comments, which got over-interpreted, shall we say, by markets, but still didn't stop them looking for a bit of a wonky one. Instead, we got a bit of a gangbusters one, 130,000, pretty much double what was expected, and blasting last month's out the window as well. The unemployment rate falling to 4.3% as well, which was pretty good because the participation rate ticked up. So that made it a doubly good number, that coming down. Wages pretty steady, 3.7% unchanged, not dropping as much as expected to 3.6%. All that jobs gain came in the private sector, as it often does anyway. That saw 172,000. So there were losses in government payrolls, 42,000. That could be some sort of knock-on from the shutdown or whatever, or just general year-end stuff, temp workers and whatnot. So the private payrolls still looking very solid, above the headline number there. We also got the benchmark revision, which came in down 898,000, was expected to come in down 862,000, I think. Let me just double check. 862,000. 825,000 expected to come in at. It came in this one, the NSA one, 862,000, which was better than the 911K previously, but market not paying too much attention to that. As per usual, better data, better jobs data has all the rate expectations changing. A June cut has now been punted to July, as far as the market is concerned. Citi, they changed their forecast, which I think they only changed a few weeks ago. They now see the Fed beginning rate cuts in May versus their prior call of March. Fed Schmid said further rate cuts could allow higher inflation to persist for longer. He's saying that he's not seeing evidence that the current level of rates is restraining the economy, and it's appropriate to keep restrictive monetary policy with inflation close to 3%. So one would think he's not in favour of cuts anytime soon. He says Congress and the executive branch may want to stoke the economy, but the Fed needs to maintain the balance between jobs and inflation. Miran says the January jobs data doesn't preclude rate cuts. I don't know what precludes rate cuts as far as he's concerned. If they get growth of 10%, he'd probably still want rate cuts. Fed's Hamak says that consumer spending is holding up, but is being driven by the top incomes. She says local contacts indicate growth is picking up, and it's good for the Fed to stay on hold and no need to fine-tune policy now. Mr. Hassett came out after the jobs report saying people are coming off the sidelines, talking about that participation rate and into the labour market. He says there's plenty of room still, though, for Fed to cut rates, inflation numbers to be a key factor for the Fed decision. He's still pumping the line that we can easily see 4 to 5% GDP growth this year, which is a bit at odds with his mate Besant, who says that US growth might have to come to 3% for 2025. Now, this morning we've had a bit of a story drop about Powell via Semaphore News that Besant has apparently, or is looking to, agree to let the Senate Banking Committee, not the Justice Department, investigate Powell. Now, this is all the politics at play. Obviously, the DOJ is more of a law type thing, whereas the Senate Banking Committee is more of a oversight thing. So it's a bit of a different switch. It's a switch down in rhetoric from the DOJ. Now, this is all said to be potentially to appease some of these people who are going to be looking to block any of Trump's Fed nominations. That includes Senator Tillis, who's the one who said he's not going to, or he's going to block anyone going into the Fed while this Powell stuff is going on. So we may get a bit of a move there, which will allow Trump to have his moan up about Powell, but it will unlock being able to put his man Walsh in the hot seat. So a bit of horse trading perhaps going on behind the scenes. As James mentioned in our room, that should be dollar positive-ish if the market wants to jump on it. But we may have to wait for see what the Yanks want to do with that when they come in. There's still reasons why people are not willing to jump into the dollar with both feet at the moment. But that news, yesterday's jobs, a hot CPI number, might change the picture somewhat, at least in the short term. We had the Bank of Canada summary of deliberations, as they call it, and ahead of the BOC's January rate decision, Governing Council members agreed that the policy interest rate was on the stimulative side. So that, for all intents and purposes, reinforces the fact that they're done cutting for now, because now their rates are going to be stimulative, not restrictive. So it should bolster the economy, meaning growth up, and that brings with it a bit of inflation. So it doesn't look like they are going to be cutting anytime soon, and raises the prospect, perhaps, that the next move might be a hike. Trump was out with his usual, let's try and catch the market on the hop. We've had this already, saying he privately weighing quitting the USMCA trade deal. As we've said before, though, it's not as easy as that, although it might be in Trump's eyes. It's not the first time he said about ripping up the deal. but it looks like he's doing a bit of chest beating on that, which got the market hopping around a bit in the CAD MEX. After that, Mexican President Sheinbaum said he doesn't believe Trump will withdraw from the USMCA, as the USMCA is very important for the US and Mexico. We know the playbook by now. It's going to a renegotiation, throwing your toys out the pram, talking about big messages, you know, how this is crap, that's crap, needs to be ripped up, blah, 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 and then it all comes around to a deal. So expect to see a bit of volatility if he continues along those lines, up until the point where they all sit down and knock up USMCA Mark II. Sticking with Trump, the South China Morning Post, so this is from the Chinese side, says Trump and Xi are expected to extend their trade truce at their Beijing summit, which may happen around April, which is when I think that some of the tariff deals have been dated to. So that probably all ties together. Trump's had a bit of a bashing as well among his own house. House of Representatives have passed that measure rejecting Trump's tariffs on Canada. So that's a bit of a slap around the chops. Again, this is all a bit of horseplay going on regarding that, but we've still got the tariff court case to get over as well. That's all gone a bit quiet. I think we might have that coming up in the next couple of weeks or something. I'll have to look into that. But anyway, he's got a little bit of a blow. He's already started threatening Republicans who voted to block those tariffs or reject those Canada tariffs, saying they're going to do rubbish in the primaries and blah, 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 blah. So that bum fight is probably going to continue today. Right, that's that for that, as far as the news is concerned. K-Man's got anything to add because he's not here, so I'll just knock it on. We don't have an awful lot coming up on the data front today. We've got jobless claims, which, as we know, haven't been doing anything for a while. We do have Bank of Canada's Rogers speaking. She's a bit of a hawk in that nest. Then we get a bit of housing data coming from the US existing home sales. Other than that, it's all going to be news and whatever we get on the headline front. So no data. I think, as I say, the market is probably putting a lot of focus now regarding the dollar and the Fed onto tomorrow's CPI data to see, is it going to add or take away from what we saw in the jobs numbers regarding that, the two big items, jobs and inflation. Right, let's have a little butchers around at what's going on. Let's start off in the good old yen, because that's still taking a bit of a beating. Rallies are getting spanked pretty much every which way at the moment. As you can see, we had that big old candle over the NFP. It was cracking up, and all of a sudden it just started crapping out all the way down into the 152s. So it was a big old move south. It did recover a bit, then it got hit again. Every time it's recovered, it got hit. We had a new low overnight down to 152.26, and that level's been a bit of a sort of, I call it a bit of a defensive level. It's a level that when we've broken or when we've come down to 152, it's acted as a, you know, the first line of defense, if you like, before a move down. Now, obviously, we had this big sharp move down, which came all the way through it back at the end of Jan. But if you look right after, we found support there again, and we found support there again, and we've had those types of moves all the way back in this little area here as well. So it is an important level, just ahead of this big figure 152. This one really is the cruncher. You know, this has been a very sharp and fast move, pretty much as sharp as it was going up, which obviously with hindsight looks to be the trade that everyone was gambling on, the yen weakening further after the election. That hasn't happened, so this is all washed out. Now, whether that move yesterday was a rate check, whatever, as I say, it could have been people who were long up here seeing that jump and thinking, right, let's smash it. Could have been someone trying to spoof the market as well, you know, sticking a load of bids down below and then go and sell a few hundred million spook the market and get sucked right into your bids down below. Who knows? Whatever the move was, we're down here. We're still looking soft, but this 152 is going to be key in my opinion. If we've got a real fundamental turn in the yen, then this level is going to be a maker or breaker for that. If we're busting through it pretty easily, then I can see another decent leg coming. You know, I've got another big level down here, 150.80s, but we could be all the way down here to the 50 retracement, even down to 148s. I would not be surprised to see that happening. Whether it's in such a straight line as this one, we'll have to wait and see. But again, tomorrow's CPI is going to be an important watch in terms of what price action does. If numbers are hot, we're going to see this rally. Where's it going to rally to? Is someone going to smash it on the head like they did yesterday? So very interesting price action going on here. What you don't want to be doing is chasing it down here. So if you were thinking about getting in short yen pairs, you don't want to be chasing it. You need to look for rallies to decent areas. I'm thinking in here at 153.60s, just around here is probably a decent level to watch to see if we bang our head on that and keep this momentum going. If we crack through there though, then maybe it's going to creep back up to the 154s. So there's a lot going on here, but you know at least where the key area is down below this 152. I'm a bit short. I had a little overnight TP in at 152.15, just above the figure, but as you can see, it stopped there. So I wouldn't ordinarily. I'd think about maybe taking a little long off here to test the level, but given the mood the yen's in at the moment, I'm not looking that side at all. But I'll definitely look to take some profit, or if not, TP down here and sell any decent rallies in that one. Euro dollar, that took a bit of a knock yesterday. We've got this 119, 25, 30, 28, 30, whatever you want to name it. Then obviously that's been failing pretty much for a couple of days. Then we got the data that knocked it back under 119, down to this next support area I've been pointing out, which has been this was that break point on Sunday the 25th, or where the Friday close and where the open was. We had this little gap up back then. We nearly closed that gap, but it found support there, and we found support there. Then we broke. We found resistance there. Found resistance there. We've broken it. Now we're finding support there. So this is becoming a bit of an important area, little zone here, 20s, 30s. That keeps 100 pips, give or take, and we're pretty much in the middle of that. So we're not out the woods. We could still see a move back up. But I think if we keep banging ahead on this 119 level now, then we could see a bit more of a downside. As I said, we've just had that bumper jobs data. If we get hot CPI tomorrow, that's going to reduce the market's view, I think, of, you know, selling the dollar, or at least buying other currencies versus the dollar. It's going to inject a little bit more uncertainty. So we could see that trade coming off the boil a bit. I'm not saying this is everyone's going to pile into the buck with two hands and this is going down to 115, but it could just take some of the heat out of all this that we've seen in the latter part of the year and early this year. So it could mean we're in for maybe a bit of consolidation, bit of a range set up, maybe knocking down a bit lower. If we're busting under 118 and holding below, and more so again this sort of little safety net down here, then maybe we've got something more on our hands and we might get moved down to that old 117.40s level. But other than that, I'm not sure we're done with the upside just yet. It just may take a little bit more time. Aussie dollar, that's still looking pretty good. As I said, Bullock giving it a bit of a green light, if you want to call it that. We're still keeping up towards these highs. Aussie Kiwi is one that got up, tested the 118, so that's looking pretty good. We got the hold after the break of this high. We got the hold down here, 116.90s, which is giving it the giddy up to get up to 118. So we might get a little bit of support just coming in between this 1720s area, 1520s, just where we had these prior highs. Mark that the prior low. Let's not be lazy, Ryan. Let's stick a line in there. So just in there. That's your close support for now. Keep above that, then we could get another move up to the upside. Back below that, then we've got a bit of a conundrum. Are we going to get back below this level, or we're just going to bounce off that and then carry on up? So you've got 2 key points for this one, and then obviously the high into that 118 there. Dollar China is continuing to blip. We've now broken under this 690.91. So that could be on its merry way. We're obviously now well through the 61.8 of this move. So that's looking a bit edgy. I could do that. I'm not too keen on looking at this one. Oh, if I'm not muck it up. There we go. Purely because I don't like moves. Could really take it to there. I don't like moves where you've already carved through the level and come back up again. So this one, I know what, I'm just going to get rid of it. There we go, nice and easy. So if we continue here, the next big level is down at 678. I think if we get a fast move down through the 680s, I think we might get a few comments out of China. Not so much reversing it, but just saying, slow down, folks. You don't need to be taking this down too fast, strengthening the one too fast. Dollar MEX, it's come into a little bit of a wider. Let's go on a 4 hour. Still in the hunt for this 17 area. We've got this trend line coming up as well. Obviously, we found tough resistance up at 1755s. This 1740s has been a bit on and off as to whether it's holding or not, but we're just stuck in this range. So we're doing this thing again where we just sit and go sideways and sit and go sideways. We haven't really had a proper test of this zone down here, and if we are testing that zone, you know, there's a lot of empty space under there down to the next area in the 1660s. So this did rally a bit yesterday on that Trump news. Not that it lasted long. We got up to the where do we get up to? 26s before that all petered out again. So we just got a little bit of an area into range 26, 28 to keep an eye on for that one. One thing I am looking at is S&Ps because I'm getting a bit twitchy for a potential break trade. We're finding it very tough up into this 7K level, and now that's been happening pretty much for a month, where we've been banging our head on it, not getting through. I did some analysis for the room and for our site earlier. When you're looking at a level that's resistant, you want to see the price action behind it, because you get an idea of how much pressure is building up behind. So you get a move up, then you get a dip back, then you get another high, then you get a lower high, and it keeps doing this stepping up, stepping up, stepping up, which can tell you that we're going to get a potential break, or it's setting up for a possible break. And that was something I was looking at back here in this rally here. We couldn't get through it though. We had a little attempt on this one, couldn't get through it. Then we had this steep pullback, which sort of washes out all the strength that was building up in this area. Now, obviously, we've come back just as quickly, but it might not have as much strength as support to keep this going. If we keep failing up here, then you're likely to see another steep pullback. Whether it goes down as far as this, I don't know, but I would think we'd probably go down to at least a 68s on another pullback. But conversely, we are now spending a lot of time knocking on the door up here. But there's two things you have to pay attention to. One, this is a CFD based on the cash price or whatever. So it trades even when the market's closed. So you can get moves above this 7K. What I think you really need to see is the cash market breaking through. You know, we've only had one little minor blip above the 7K level by 2 ticks. But back in January. This is really solid. I don't know what's going on. Someone might have a better idea than me. I'm suspecting it could be options, you know, a big figure up here, big 7K level, psychological. Could be some options up here, keeping it restricted. What I do know is that the more times we keep banging our head on the door, the chances are that if we do break, it's going to go. And we're probably going to be, you know, 7-1, 7-2 pretty quickly after. So I'm looking at a potential break long on this one, but I want it backed up by this cash going through. So I may just play it on the back of that rather than the actual CFD contract going through the level. Because as I said, we've been up above 7K a couple of times. But I think it's bubbling. But as I say, on the other side, if we keep failing here, we're probably going to head for a steeper pullback. Right, boys and girls, don't make me sit talking to myself all day. What do I say about the pound? Not a lot. It's a load of old crap. Well, I'll look at two things. I'll look at euro sterling first. This one isn't ready to give up an upside move. Yes, we're still struggling to hold a move above 87.20, but the dips sub 86, 87, 86.90 are being bought up pretty quickly. That GDP data gives traders no reason to pile into pound longs because it's crap weak data, and this political stuff is still, it may have eased off in terms of front page news, but I don't think the market's taking its eye off it that quickly. So as far as euro sterling goes, we're probably in this range, 86.90, 86.80s, up to 87.20. Only when you see a break and a hold above either side of this can you probably see the next direction coming. Excuse me. Right. Cable. Not really much to say about this one. It's doing a bit the same as what euro dollar's doing. More so a dollar trade than anything else, the old speed move. To be honest, I've not been looking at cable a lot. We always had this move up to 137s again, which failed. We got above the figure, but it failed. So this is your nearest big level. That's the door open for a move to 138s or whatever. This 136.70 level, which is his historical one, we had the break under. It held straight after. So this again is a key level to keep an eye on. And then we've just got this secondary one off here, more short term, 36, 50, 60. Put it in the same boat as this, and we've already had half an attempt up there. But the pound in general, I still don't see any big reasons why the pound should gain significantly any which way. Yes, we've had a bit of positivity from the data, some of the data in the early part of the year, but the Bank of England has just come out finally taking some responsibility and turning more dovish. And I don't know whether that data is going to hold up. And if it starts going backwards a bit, then obviously that's going to ramp up rate cut timings for the BOE, and then we'll probably see the pound softening again. So from here, I still have a negative bias for the quid going forward until something changes. Dimmy, Swissy, yeah, that's still looking sick as a dog, or rather, the pairs are looking sick as a dog. Oh, that's all gone a bit wonky. Once again, we're in that situation where we're in unknown territory. This big breakdown that we've had, it's already held earlier this week. Last week we already held a break there. We haven't even got up to it again at this 92 area really. So that keeps the pressure on. People will be clamoring, where's the SMB? Where's the SMB? Maybe they're keeping their powder dry. Who knows? But this one is not looking good. Euro Swiss. Dollar Swiss holding up a bit better after hitting those lows. A bit all over the shop with the charts today. What is this telling me? It's not telling me an awful lot. Again, while we're below this zone here, it stays very bearish. But we've had a bounce that got sold. We didn't quite get down to that low, so that's buyers who bought there, just putting in a few bids there. But again, the bounce is looking pretty weak. So really take the 76 level, that's your key. 76, 78, 50s, 70s up top. That's your range to watch out for. If we're breaking under 76, then we got further to go. And everyone can question where the SMB are more and more. Right, anything else? Let's have a look at gold quickly, see what that's doing. Not an awful lot by the looks of things. We did have a little pokey up above the 51, 51.10. Didn't last for long, back below. So the fact we found a few buyers up here just tells you that we are still in a bit of balance. No one's really ready to start piling in and taking it higher. But there's probably enough dip buyers to keep the sellers from pushing it more, meaningfully lower. So we got this range, intra-range at the moment, call it 51s, 50s, or 5,000, 5100s, pretty much between the fibs, you can call it. Look for direction, whichever way we're moving out of that. If we're breaking down through 49.66, then maybe we're going to get a bit of a steeper pullback. As I say, this is looking very balanced, but that doesn't mean people aren't going to jump in. I think if you start getting a solid break and hold above 51, that's going to encourage more buyers in. And then, you get a bit of a tailwind and we probably go up to 52 pretty quickly. Same on the downside. People are happy to buy the dips, but and sell the rallies. But if we start breaking 5K and 49.66, the sellers are going to be, right, we can push this a bit more, and buyers are going to throw in the towel. And so either way you break out of this, you're probably going to see a fairly decent move one way or another. But until then, it's ranging nicely. Go with the flow, as we like to say. Right, I'm going to call that a day for today, unless you guys have got any last-minute requests. I'll give you a 10-second countdown, and otherwise we'll close it up. What I will say is join us on Face later. We've got a couple of good guests, those in the chat room and who were following on Twitter last week. I put up an interview with Mr. Nick Carney, who's an ex-UFC fighter who's turned his hand at markets, and an old US floor trader, Jimmy Jude. Very good interview about the insights of trading from a market perspective and from someone coming in from a different industry. We've got those two guys on the Face show later. We're having a bit of a get together. I'll be on there, Blake will be on there, and we'll have a chinwag with these guys. It should be a very good chat for all you guys and girls who want a bit of insight into the old market days, pit days, like I was on. So join us for the Face show later, and that'll be a good interview, no doubt, and there'll be a few fun and games going on there. Aside from that, that's it. Have a great day, everybody. See you later, and otherwise I'll see you tomorrow. Have a great day.